Hi, everybody. I'm Jackie Lonia, CEO of Shojin Property Partners. I'm joined by Jackie Chan, Head of Investments. And today we're going to talk about a new product launch. And Jackie, do you want to take it away?
Thank you, Jatin. Hi, everyone. Some of you probably have met me, some of you probably haven't. So I'm Head of Investments at Shojin. I look after all the investors and the fundraising for investment opportunities that we present to investors. Today we're here to discuss a distress acquisition opportunity that we want to present investors with in terms of investment opportunity. So as a lot of you know, primarily Shojin's business is a lending business. So we lend to investors, to borrowers to build residential development projects. And as lender, from time to time, there will be opportunities that fall into distress and hence present new opportunities for new investors. And hence, right now, we are presenting a new opportunity for investors on a project that we lent on. Didn't go completely according to plan, but at the same time, it's not a completely disaster scenario where actually there is a potential upside of opportunity for investors to invest in. Jatin, do you mind
share the
slides?
Yeah, let me just add very quickly on that. This is a function of the market from the last 2-3 years as well. So, a lot of banks and lenders have struggled to exit projects because the buying market has been very slow, with higher interest rates, lack of first-time buyers, and so on. A lot of developers have had to hold on to finished projects longer than they wanted to, and in the process, obviously, interest kept accruing on their loans. Obviously, you had senior lending interest, but you also had mezzanine interest, which is where we often come in. So across the industry, there are a number of these type of opportunities. This is going to be the first of a few that we will look at, not just from our own portfolio, but across other lending portfolios as well. And this is one of those rare times where you can pick up good distressed stock of very good quality at a good price, knowing that the market is now turning. Things are improving on the front line, and Jackie will go into a few details on some of those changes that are happening. So let me just share.
We've got this project in Godalming. So we lent a mezzanine loan to this developer. And the reason why investors like ourselves and lenders as like ourselves, you want to be in a lending position is because when things go wrong, you can foreclose. And who's going to take the hit, which is the developer's equity and his profits. So this is where we've got this opportunity right now that we're presenting to investors on a site called Westbrook Mills in Godalming in Surrey. Beautiful, idyllic town.
Oh.
So this project originally we lent to the developer on a mezzanine loan basis together with a senior loan. We lent about 5.2 million mezzanine loan plus a senior loan on top to the developer to build out as a finish and exit loan to complete and lease and sell the units in order to pay everybody back. So the developer had an issue in his wider portfolio. It wasn't even about the project. The project was fine. In his wider portfolio, that fell into administration. So it ends up into a scenario where in order for us to protect our position, we acquired the project and took it over at the expense of the developer's equity, number one. Number two, because there is a shortfall on the interest, we are in negotiation with a settlement with the developer or with the borrower with to relinquish his PG, basically his personal guarantee. And he is making us an offer in return of basically buying two other block switches next door as the whole site, and we take it over at nominal value. So this is where the distressed acquisition opportunity arises, because it's at the expense of the developer who has fallen. So the opportunity here is basically investors have an opportunity to pay for the price of 72 units and potentially getting 126 flats in the whole site. The whole site has 3 blocks consisting of 128 units in total. And we currently already own the SPV vehicle that you're going to invest in, already own 72 units. And we've got a claim and we will settle. We're already in legal execution process and actually taking over the remaining other units, 126 minus 72. So what this means is that it effectively puts the acquisition value at 31.1 million, like for you to come in, which is at a 19% discount to the current red book valuation by Savills at 38.2 million for all 126 units. This is a very unique opportunity, and it can only be present because we own this SPV vehicle, and we're now allowing investors to invest into this SPV vehicle to take advantage of this. So the 38.2 million valuation was just done by Savills last month, 1 to 2 months ago. So it's a fresh valuation based on the new market comparables, and it's done by a reputable valuer, which is Savills. So this is how it's spread out across the 3 blocks. Block 1, in total, there are actually 87 units, but 2 have been sold to independent third parties. So what we can own is 85 units out of 87 in Block 1. Blocks 2 and 3 are 32 plus 9 units, 41 units in total, and they are fully let out, fully rented out. In Block 1, there are over 40 units that are fully leased out. So there is rental income generating across all 3 blocks. So the rental income will be used to service the senior interest. While it doesn't fully cover the senior interest, but it serves a big chunk of the senior interest. There is a little bit of shortfall. I think it's about £50,000 a month.
So total shortfall on just block 1, right?
Yeah.
It's about 70,000, but we have interest roll-up which covers us for 7 months. But also, as part of the broader settlement with the borrower, we're receiving another £400,000 cash in addition to the other blocks and another piece of land. So there will be about 12 months of interest coverage already locked in, and that's before we sell any apartments and before we rent out any more units.
And basically, the play here is that we own 72 already. Investors can invest in it. Worst case scenario, you own 72 flats in Godalming. Best case scenario, we paid for 72 flats and we own all 126 units. And that is what gives us the 36% return that we projected. This has not yet taken into account any property prices increases that we as investors will benefit from in the event of, just like if you buy any other properties in the market. And I think a lot of investors will know right now, if you've set aside funds and you wanted to buy a buy-to-let, like the market is broken right now because of the expenses, regulation, and so on. So this is a unique opportunity for investors if you want to look into buy-to-let opportunity, but you don't want to hassle and everything. This is the way that you can basically effectively buy-to-let own 126 units.
And yeah, so let me just take that a little bit further. So on the one hand, it is about owning a block of apartments that are rented out and provide regular income. But then it's also like a wholesale to retail model, right? Because we are going to own all of these apartments and we'll sell them off. We'll put a handful on the market at a time. There's already a lot of pent-up demand in the area. And the idea is to sell them into the end user market. Because there is a lot of interest in these apartments from downsizers and also first-time buyers. And you'll see why when we take a look at some of the pictures of the actual site. But before we do, let's just have a quick look at the location of the site. Now, do you want me to do this one?
Yeah, sure.
Godalming is a really, really nice, almost like a village, but like a town in Surrey. It's on the main line straight into Waterloo. So this is all classic commuter belt and classic stockbroker belt, as they used to call it. Why? Because from Godalming, people can take the train straight into Waterloo. From Waterloo, there's a service that goes straight into the City of London. So that's why a lot of the people in the finance industry live there. And as a result, and especially because of London prices themselves being so high, it's a very popular place for people to live. Now, the as I said, the demand there is not just, yes, it's first time buyers, people buying as individuals and couples, but also because of the wider Surrey area. Surrey has a lot of nice big houses. This is perfect for people that are looking to downsize as well. And so that's why even right now, while all the units, there's a number of units that are rented out, they went very, very quickly. And it was taken up by a mixture of professionals working in London and also people that were, kind of retirement age, didn't want to maintain a big house. So that's the location. Jackie, do you want to go talk through the numbers?
Yeah. So, and also like in the micro location, this site is 5 minutes away from Godalming train station by walking. So I did that walk as well. It's very, very, very convenient. Like and then it goes straight into London Waterloo. So this is where location wise it's unparalleled, and hence rental market has been very strong on that. And also we've already started receiving sale offers from buy offers from individuals who rent it and want to actually buy the unit for their own purpose. So this is where the exit we see is pretty strong, and hence we're offering this opportunity for investors to come in to invest into this block. So this is where the capital stack stands and where your investment is going to come into. It's the light blue part. So the light blue part, the 6.8 million raise is where we're looking at. The 25 billion is where the banks and senior lenders are in right now. And a refinancing is happening simultaneously as we speak right now, because as we mentioned, we took over the block from the developer who was the borrower. So now we are owning the block and we are the borrowers in terms of the financial stack. So you look at the pre-refinance, that was basically the original junior debt in play, plus on top that was the developer's profits and equity, which has been pretty much wiped out. You can see from the capital stack on the left. So right now we're taking over the block and we're offering investors opportunity to take over this 5.86 million position into a 6.7 million position. What's the gap? The gap mainly is you look at the senior debt, the bank is going to because through the refinance, the new lender coming in at a slightly lower debt level because of it's a different bank and a different lender. So the loan to value appetite is a little bit lower. So it's at 13.675 million. So in terms of the refinance, there's a little bit of a gap in terms of equity injection that's needed. So this is what this equity fundraising is going to be about. So this raise, first, the use of the capital will be used to refinance. Most of the use of the capital, if not all, is for refinancing purpose. Basically, to take out the existing capital stack, restructure it so that it'll be clean, just 6.8 billion equity plus bank debt of 20.7 million on the far right. That is the ultimate goal after this whole refinancing by raising this equity capital. So the use of proceeds, which is everybody wants to know, like, okay, if I invest the funds, where does it go? So you will be owning bonds in the SB vehicle equivalent to owning the asset in itself. So you will have a legal claim on the asset that we're owning. Number two, the funds that goes in will be used to refi, meaning that paying first the senior lender on the shortfall, between the 14.4. It's come down a little bit because there was some interest has been serviced by rents and so on. And in the end, it's like 13.65. The difference between about 14.1 to 13.65 million, the final redemption. And that's about 500K, and that will go to senior lender. The next batch will be used to start refinancing the junior debt, and basically take the existing junior debt out into this new capital stack and becomes an equity. And a big chunk, I'm expecting this 6.8 million that we're raising, a lot will be rolled over from the existing junior debt investors. I've spoken to quite a few of them. A lot of them are actually very are keen to just stay into the project, so that available to invest by new investors coming in may not be as much as you would expect, like in this full 6.8 million, because existing investors might want to say, I want to stay in. I like this project is promising, and I want to take a share of that profit. So they may take up a big chunk of that 6.8 million, but there will be some opportunity for investors to come in, like for example, the senior refinance part. There will be some in terms of some investors might want to be refinanced out during this process. So this is where the whole capital stack will move into a clean structure during this whole process. And in return, you can see on the far right, you're basically investing 6.8 million of capital to get 5.7 million of profits. So that is where the 36% per annum return that we've presented to you, how does that work? Because we basically took the equity and profits from the developer on blocks 2 and 3. We're taking it at nominal value, basically about for £1, let's say. We're owning that asset for pretty much £1, and that's where almost like about 3 million of that profit of the 5.7 million comes from. So 3.5 million. So this is where the distress acquisition opportunity comes in. So investors can actually invest with 6.8 million, potentially get 5.7 million profit on top of getting the 6.8 million.
Have you included the land?
Yes, there's a land of 800K value.
Yeah, you've spoken about that?
No, you did that.
Yeah, so just in addition, there's a piece of land. So the Westbrook Mills site is quite big. You've got the 3 blocks, but there's also another piece of land which has strong development opportunity. And again, we're getting that as part of our settlement. So that has value today, but it also has value if we pursue the planning on it. Now, it sounds a bit strange, but one of the previous borrowers, Jerry, is actually very, very strong on the planning side. And he's already done a lot of the work on that. So we may just appoint him to go off, get planning, and then we'll sell off that piece of land. That could, in theory, generate an even higher profit. But again, we're not locking that higher profit. I think they said it could be worth up to about 2 million in itself with the planning. But again, we're not factoring it in at 2 million. We're factoring it in at 800. So
Savills actually did a short desktop research in terms of valuation and gave it the 2 million valuation. But we looked at it ourselves and did our own assessment. Is like that 2 million could fluctuate. Like that's based on a bunch of assumptions. So we took it as a very conservative of 800,000 for to factor into these numbers here. If in the event that it does hit Savills numbers of like 2 million, so there you can add another 1.2 million of potential profits on top of this 5.7 million.
Yeah. So I mean, the exciting thing with this is that, and because we often get asked about, equity style deals. And the beauty of this is that there may be ways to even increase the profit. Now, bearing in mind this is an equity position, the profit could go down. But based on our kind of conservative assessments, we believe that what we presented here is reasonably deliverable, but it doesn't mean it couldn't be better. Yeah. Also, remember, this is on the basis of a sell down over 2 years.
Yeah.
So the numbers are assuming that in fact, isn't there a page on this? Hold on. This is assuming that everything is sold down over a 2-year period. Yeah. But in fact, if it sells faster, then the annualized return could well go up. So there is that to look forward to as well.
Because if everything's like best case scenario, if everything all of a sudden the market is very hot and you sell everything in a year, like it will basically be a 72% return over a year, 1 year period.
Yeah.
And if property prices, like market is hot again, like which is heating up in the last month or two, like starting a little bit, like a little bit more transactions at least, like compared to the last 2 years, which has been quite subtle.
Yeah.
If things do pick up, the potential profit could be higher as well because we will be raising prices as we sell. So it's 126 units to sell in total. And whatever price that we can fetch in the market and actually get it, that will be a profit share into all investors.
And to even out that statement, remember the risk here is that the market is slow, right? So it could take longer to sell. Instead of 2 years, it could be 3 years. We think we've used a fairly reasonable assumption on the rate of sales. We are working with various agents. There's going to be a local agent who will be working on the sales, but also Hamptons are engaged on this. Hamptons have an office in Guildford, which is the bigger town down the road, from where a lot of people get priced out and they push into areas like Godalming. So they will basically drive potential buyers from Guildford to Godalming, but we also have the local agent as well. So, and Hamptons are a national brand, so they can attract investors. It might be investors from across the country, but also internationally. They have international offices. So I guess the point being made is there's potential upside, but that's not to downplay the risk. And the risk is really one of time more than anything, because the beauty with this is you own the asset. You are the equity investor. We have loans on it, senior loans on it. And also, another thing that could help boost the market a little bit is hopefully the upcoming interest rate cuts. Is it today?
Yeah, is it today?
Thursday?
Yeah, I think so. Thursday, yeah.
Yeah. So anyway, things are happening in the market that will help.
And how interest rate cuts will help? Obviously, mortgage rates will come down. I think we've already been seeing mortgage rates coming down, and this will be helping a lot of potential buyers looking to buy assets.
Yeah. The mortgage market has the competition has increased, which is really, really good to see. With rates coming down, especially, the other thing is the government tightened up the affordability rules a few years ago, which really kind of squeezed the mortgage market, because even wealthy individuals, this hit a lot of the middle classes quite hard, actually, because if you have kids and you send them to a private school or something, suddenly the bank runs affordability checks and says, actually, you can't borrow money, but yet you could be earning £200,000 a year. So the government has finally acknowledged how it was stifling the property market, and they are making changes to relax affordability rules, and again, especially to boost first-time buyer home ownership. So that will all help. So there's a lot of the right things happening in the market. On the screen right now is also just a quick overview of what the structure will look like. So investors will be coming in at the top level, Shojin Westbrook Mills Limited. This is the company we already have. This is where the current loan has been made from. Westbrook Mills Westbrook Mills Block 1. This one on the left-hand side is what we've already done. So we now already own that. And that GRE finance is moving over to HTB literally any day now. And then on this side, we are stepping into, so we'll be handed that side as well. And we're stepping into the existing facility with Al Rayyan Bank, which is it's a well-priced facility, and they're quite happy for us to step in. So we will own everything under this banner up here, Shojin Westbrook Mills Limited. In addition, the land will also come in on this side. It'll be included as part of that settlement agreement.
Yeah, so a little bit on like what Jatin mentioned about GRE finance and HTB side on the left. So right now, this is the existing structure that already owns Block 1, and that's where we're stepping into the developer's shoes. And also in terms of the GRE finance was the lender who lent to the borrower, which is the developer at the first place. And because the developer no longer is solvent, so it is being refinanced into HTB, Hampshire Trust Bank, who is going to lend to us, like Stonegate Homes, basically, Limited here, which is owned by us. So they will be lending to us in order to complete and stabilize the whole capital structure, so that we can just get on with selling the units and realizing all the profits in there. So investors can come right now is the opportunity to come in at the top co level here. This is where investors come in. Well, like in terms of the structure, like an instrument, it will be a bond instrument, but it will be a variable interest rate bond instrument. It's just mainly for a lot of investors' tax purposes that it will become an interest in terms of the profit. And it is a variable interest bond instrument, but it will effectively mean it's like equity. Like in terms of your returns, economic returns.
So profit participation.
Profit participation bond, basically.
Perfect. Just before we move on to questions, I'm just conscious that in this presentation, you're not actually seeing any of the the images of the site. So I'm going to just share something else with you. Okay. Here you go. It's a really stunning site. As Jackie said, it's a few minutes walk from the station, but it's like being in nice open countryside. It's really good, and it's only about, I think it's about 8 minutes walk to the town centre. 8 to 10 minutes.
5 minutes.
Oh, 5 minutes. Okay,
I did that walk myself.
Yeah, and it's a lovely town centre. You know, a lovely village. The other thing you might want to see here, I mean, that's the finish of the building. So they're all done. It's a finished development. Move into questions. Let me just kill this. Aha. Okay. Right. So we do have some questions.
So please do type in any questions that you may have, and we will see it, and I'll read out the questions.
Okay.
Number one, have all the original investors in the Westbrook Mills been paid out?
So the short answer is no, because they're all part of the current mezzanine structure. So what's going to happen is there's, I'd say, about just over 5 million in the original mezzanine. Now, those same investors could just stay on, but because this is almost like a fresh opportunity, it's a fresh scheme, if you like, which will now carry on for the next 2 years. What we've offered them is to say, okay, this hasn't quite gone to plan. You could sit in there for the next couple of years as part of the equity and then get paid out. Or if you prefer, because I appreciate a lot of them will have been in there for about, 18 months now?
2 years.
2 years. Some of them may not want to carry on, but it wouldn't be fair to the incoming investors to pay out all that profit because the profits haven't been realized yet. So their option is either, look, we can replace your capital, so take you out, but you'll lose any accrued interest, or you convert into the equity that we're now proposing, and now you'll be earning, was it 36%
per annum over the next 2 years?
Over the next 2 years, which will then make up for the interest that you've kind of given up on. So the interest will be wiped out because obviously there has to be some pain there because it didn't quite go to plan. But it's really offering them the opportunity to just take their capital out or stay in for another 2 years.
Okay. So the next question is, I'm just conscious of time. And next question was, what is the investment period? 1 to 3 years. So the answer is, we're projecting 2 years, but this is an equity play, so it depends on the sale progress. Like we're on a base case scenario basis, it's 2 years. So we will see how long. It will depend on how long it takes to sell all the units. It could be faster. It could be longer. And the last question is, when would you want the funds? It is basically, we'll launch it on the platform to accept funding like this afternoon. So then you can start investing into this project.
So the idea is to raise the funds as quickly as possible, but obviously, you know, if you need to make arrangements, I know a lot of our international guys often it takes a few days for the funds to come in. That's absolutely fine. So you just need to pledge on the platform and then just follow with your funds. But of course, if you need to speak about timing, you just call a member of our team.
Has there been any pre-sales already made? If so, how has the purchase and reception been so far? We've already received an offer for one unit, and it's already underway to be exchanged and complete in the next 2 months. So yes, it's been and we haven't even started actively marketing it. Like, it's in process right now. So Marcella Coop is a local agent in Godalming helping it, and then the second is Hamptons has also been giving us proposals on marketing it, and it's being in process right now. So I'm conscious of time, Judge.
Yeah,
we've got.
I know we have another webinar to jump on. Okay, look, let's stop there. You may have more questions. I do apologize. We've got back-to-back webinars today. So if you have further questions, please feel free to send them in. Obviously, our investment team, headed up by Jackie here, are available to have a chat at any point.
So please email invest@shojin.co.uk, invest@shojin.co.uk. Me and my team will pick it up and we'll make sure that your questions are answered.
Okay, that's it from us. Thank you very much for joining, and we look forward to speaking to you soon.
Thank you. Thank you.